If Warren Buffett is selling $7 billion of Bank of America, if you've got any shares in banks, sell them.
Why is Warren Buffett selling all of his stocks?
Warren Buffett is like the biggest insider trader of them all because of his knowledge.
Why is Warren Buffett selling all of his stocks?
Well, I don't know if he's selling them all, but he did dump $7 billion of Bank of America. Now, that tells me one of three things. One, he's planning on dying soon. He is 94. The thing is, I think he's going to live till he's 185. So he might be looking to exit to give his money away. That is an option. Two, he thinks the banks are going to go bust. He sold $7 billion of Bank of America, just Bank of America. I don't know what else he's sold. That's a lot of one company and one bank. And of course, he doesn't sell it all in one day because spooks the market. But he's been drip feeding out of the Bank of America for quite a while. So the second thing that tells me is he thinks the banks are going to crash. Maybe he thinks the banks are going to go bust. I spoke to Kim Kiyosaki and Robert Kiyosaki face to face about the banks in America. They've been telling me that banks in America have been going bust. And this is a bit harsh, but what I like in America is that sometimes they let banks go bust. Now, I understand why they don't want to let banks go bust, because you've got savings, you've got money in the bank. You would be an innocent victim if a bank went bust and you lost your savings and deposits. But imagine if one bank in the UK went bust and the people, the taxpayers, we collectively lost 100 billion. There would be a revolution. We would take a lot of our money, if not all of our money, out of all the other banks. Immediately, all the other banks would be held to account. They'd have a liquidity crisis. I mean, it could really hurt savers and depositors. But I have been saying for years, don't leave too much money in the banks. But the banks, they've kind of got the best of both worlds because they know they'll get bailed out if they go bust. So let's say you've got a company and if that company goes bust, it doesn't matter. You can just let it go and start another one. You're probably going to be a bit more free, take too many risks, maybe, a little bit of rape and pillage and thievery, running your company. You're not going to run it in an efficient, professional way because, you can just wind it down and start again, wind it down and start again, no consequences. And this is what, in the UK, the banks are protected. And then when the banks do go bust, they get bailed out. The problem with the bailout is you pay for the bailout because the bailout is taxpayer money. So in America, some banks, admittedly not yet the biggest banks, but some banks, starting to go bust. And I think that would hold banks more accountable and therefore make them more competitive and therefore make them offer us a better service. Do you know what insult savings accounts are?
No,
most people don't. They are high street bank savings accounts where you get 1.4, 1.6, 1.8% interest. Do you know why they're called insult savings accounts? Because that's a fucking insult. Because interest rates are 5 or more than 5. So I'm supposed to be receiving that in interest, yet I put my money in supposedly the safest high street banks, and they're giving you and me an insult interest. Do you also know that most people don't keep their cash in savings accounts? They keep them in current accounts. And current accounts give you like 0.2% interest or whatever. So the banks are having it away. They get the best of this, the best of that, the best of the other. And it's wrong. And they should be held more accountable. So Robert Kiyosaki, Kim Kiyosaki have been saying that there's probably a big banking crash coming. They're probably, if the governments are in debt, I think in America it's nearly 300 trillion, I believe. So the banks and governments are basically connected and in cohorts. So also all the deposits, 90% of the deposits that the banks have received from you and I in current and interest accounts, they've loaned and invested that out. They're allowed to. They only have to keep 10% reserves. Which means if 11% of us go to the bank on the same day and want our money back, that is an insolvency event they are insolvent, they're trading insolvently. but that solidifies an insolvency event. That's called a run on the banks. The banks have to shut because they can't pay you back because all their money's out. And look at the riots we're having on the streets in the UK, and look at, the palpable unrest and how taxes are soaring in the Western world. This is all boiling up. So I think Warren Buffett knows all this shit because he knows a lot more than me, and I've been doing this 20 years. He's been doing this. Warren Buffett's been doing this 80 years. He started investing when he was 14. He's 94. So if Warren Buffett, everyone watching, if Warren Buffett is selling $7 billion of Bank of America, if you've got any shares in banks, sell them. But of course, Warren Buffett's not going to say that because he doesn't want to spook the market. And hey, look, I've got 3 million followers, but I'm probably not big enough to spook the market because he might still have shareholdings and he won't want that to drop. So the second reason I think he might be selling billions of Bank of America is he thinks banks are going to go bust.
So is that what happened with the San Francisco bank? Is they only had so much left in reserves and too many people tried to draw out?
That's what happens in any bank run.
Yeah.
Now, in Japan, I'll tell you what they did. I mean, this is filthy. And they can only get away with it in kind of communist regime. But the banks go bust and they just make a government statement which says, your savings are now government assets. Closed, full stop, fuck you. Imagine that. Imagine you getting a message with all the savings you built up over, well, not you, 20 years. Yeah. You're about 15, aren't you?
And 3/4.
Yeah, plus VAT.
Yeah.
But imagine you'd saved over 10 years and then the bank just said, oh, that's now a government asset. So, yeah, it happened in Northern Rock, which Virgin, I think, then took over in the UK in the last banking crisis. Yeah, banks only have to legally hold 10% deposit. That's insolvency. Like if a client paid you 30 grand for a year's service, but you could take 27 of it and only leave 3 to cover the cost of the year's service, that's trading insolvently. You can't do that. That's illegal. You could be struck off as a director. You could even go into prison for that. If you knowingly trade insolvently, i.e. you're taking sales in, but you know that you're just putting them into debt, that's basically a Ponzi scheme. It's what Madoff did. The great Ponzi schemes, that these infamous investors did. Like, that's illegal for you and me. It's perfectly, the government and the banks have made it legal for themselves. So you should beware. If you leave your money in the bank, you have loaned your money to the bank. Let me ask you this. Would you loan me money with no contract whatsoever?
No.
Would you loan me money if my contract says, I may pay you back?
No.
Look at the terms and conditions. They basically disclaim all responsibility and basically say, your money is their money, and they can shut you down or freeze those funds at their own discretion. So what you want to do is be an owner, not a loaner. A saver is a loaner. Here's the thing though. I'm saving let's say you're the bank, and I'm saving my money with you. I think that, it's still my money. It's not. I think I'm earning on it. I'm not. Because even now they say inflation is coming down. I mean, minimum inflation's got to be in real terms is 5%. Minimum. I think they're saying it's under 3. Let's give them the benefit of the doubt and say it's 3. But NatWest and Barclays and other big banks are giving you 1.5. So I'm loaning you money and I'm supposed to, because when you loan, you're supposed to get interest. But I'm loaning you money. It's now yours. I've got no collateral and no security. Oh, and I'm losing money loaning it to you. But you're making money loaning it out.
So, hey, I'm here for it.
Yeah.
It's a great deal for me.
But here's the thing. If you are the bank, that's really smart.
Yeah.
So you need to learn how to be the bank, which is what I've learned how to do. So mark my words. If you leave money in savings accounts or current accounts, in mainstream banks or even challenger banks, that's a fucking risk. That is a risk. And of course, they're not going to tell you it's a risk. Because it would be a major catastrophe for the central banks and the governments if there was any kind of bank run. And they're this close to a bank run all the time. Because they only have to leave £1 of every 10 that they've received in savings. So you go from a loaner to an owner. And an owner is I borrow money from the banks instead of me lending it to them. Now, if I could lend money to the banks and I could have a first charge on the bank and I could repossess the bank if they didn't pay me back and I could get 5 or 8% interest, I'd loan money to the bank. But that's what a property is. The banks loan money to me. They've got a property as collateral. I'll pay them I've got a 12-year loan for 15 million quid at 2 and a bit percent.
Most people's like family home isn't 2 and a bit
Yeah.
percent.
Well, people's mortgages are now going up to 6 and 7. Now they're coming out of the fixed rate. So yeah, be very mindful. Have some in gold and some in silver and a little bit in Bitcoin. Always do your own diligence, by the way. I'm not recommending anything. I'm telling you my experience and opinion.
Yeah.
And I have, as you know, done $250 million in sales. And as you know, I do invest a lot and you ask me questions and I help you. Do your own research. But like gold and silver, they call gold God's money. Gold way predates cash, way predates any form of financial instrument. Gold's been a currency in fact, have a little Google. When was gold first discovered?
2400 BC.
So 5,000 years ago.
Yeah.
A bit of a longer history than this paper that we exchange for money. Owning real estate in the Western world is very secure. In some countries, maybe in communist states, they could take that ownership off you. They're not going to in the Western world. So you're pretty safe owning real estate and owning your own business. Watches, anything physical.
Will there only be a crash if everybody draws their money out in cash?
No. Crash can be based on supply and demand. You have oversupply, you have a reduction in price. You have an undersupply, you have an increase in price. I think it surprised a lot of people when lockdown happened that the price of everything went through the roof. I mean, it's obvious now, because if you look back now, we're like, yeah, they didn't make any cars, they didn't make any watches, and no houses were being put on the market, so obviously they would go up in price. But I don't think anyone at the time thought that because they thought this is an absolute disaster, everything's going to collapse. But they put $1 trillion in the UK economy to pay for lockdown, call it stimulus money, which creates an inflation event, which reduces the value of your money. Inflation has been 25% since lockdown happened. So I think looking back, everyone's like, well, yeah, obvious. If you have undersupply, you have increase in prices. If you have oversupply, you have reduction in prices. So supply or perceived supply can create a crash. Opinion and emotion can create a crash. Because if you look at daily moves in the value of a company, they can go up and down based on sentiment. So imagine if there was some news that Warren Buffett had terminal cancer. I imagine that would affect the value of the companies that he's invested in, for example. So it's called reflexivity. Essentially, markets tend to move more on human emotion than real finance fundamentals because markets are driven by humans, fear and greed. The next thing that can cause a crash is a lot of people selling at the same time. Everyone goes, why is everyone selling? So people also sell because people have a herd mentality. Bitcoin's going down. Oh, I better sell before it goes down more. So they sell under market price, whatever market price is. Then you've got new evidence of a lower price and it pulls the market down. If you heard on the news that the banks that you have the most savings in could go bust, you might run down 8 a.m. in the morning before the banks open and go and pull all your money out.
And is the only way to pull it out in cash? Because I guess...
No, they won't let you have it in cash. Have a look how much you can draw in cash.
But depends on the bank, but absolute limit about $2,000, but some of them are a few hundred.
Try that. Try and get $2,000 out. They'll want to know where it's from, who's it going to, how you earned it, your inside leg measurement, your relationship status and history. They'll want 11 fingerprints, 3-eyed ID check. You can't get cash out of the bank.
No.
Now, I know I said a bank run, you're queuing up at the bank. I mean, that was kind of like how it used to be. Now everyone's just going to go online and try and withdraw the money.
To another bank.
Yeah, but do you think you're going to be able to do that? Or do you think they might just say something like, oh, server issues?
Like what Robinhood did.
What did they do?
So through lockdown, there was a subreddit called r/Wall Street Bets, which is a bunch of investors, just internet people, essentially investing their money. And obviously in America during the pandemic, they had all these stimulus checks and people had all this disposable income. And somebody found that one of the big cinemas in the US was like massively undervalued, and they pumped this thing. And loads of ordinary people made a ton of money, and all of the big investors lost a load of money. So then when it got to its peak and they went to sell it, Robinhood blocked all of the commercial people. So all of us ordinary people wanting to sell the stock, it just stopped letting you do it and essentially allowed all of the big investors to get out of it first.
That's what big institutions and big companies will do. They will block the smaller investors and shareholders. If a company goes bust, then the biggest shareholders, they will get treated in priority order. So if you get repossessed in a property, the bank will take everything and any second charge or restriction holders will get nothing. When a business goes bust, the administrator will go in, the administrator's fees will rack up and rack up and rack up, and then the biggest shareholder will have priority. So yeah, if you're a little minnow investor, you'll never have any rights, which is why you want to be diversified, and which is why you want to ideally own some of your own assets. I think it's a risk to either trade or own a high amount of stock in individual companies. Now, if you're Warren Buffett and you have essentially someone like Warren Buffett, I don't think he would illegally insider trade because I don't think that's his moral compass. And also, I don't know that he's got that ability, how close he is to, the people that control the world. But, a lot of these politicians can insider trade. They go in, they earn not even a couple of $100,000 salary and they're worth 60 or 100 million. But essentially Warren Buffett is like the biggest insider trader of them all because of his knowledge. So the best way to become an insider trader and have the inside track and inside knowledge, an unfair advantage, is that you know more than everyone else. So Buffett will not be heavily into one company because he knows diversification is important. But he'll also be quite heavy into companies that, he knows are fundamentally sound. But the average person, I think the easiest thing is just be in the S&P 500 or the FTSE 100. Get like a Vanguard fund which reinvests and redistributes across those 500 or 100 companies. Like the S&P 500 is way less likely to go bust than a bank because it's 500 of the top companies in America. So it's never going to go bust. Also, you want to be diversified across physical and non-physical. So the stock market and high interest savings are non-physical. Gold, silver, and real estate are physical. So diversified across different asset classes, diversified across different classes within the classes. So I have single family homes, multi-lets, short stay lets, and then apartment blocks. And then I have retail. I'm buying a lot of retail at the moment. So if I just have single family homes, there's a risk to me. Because if Vanguard, BlackRock, and Lloyd's come in and gobble them all up like they're saying they are, they may control that market to a certain degree, or there could be a black swan event. That being said, to make money, you focus, and to retain and protect, you diversify.
You've worked hard your whole life, built savings, maybe even bought property. But when it comes to stocks, you hold back. Because deep down, there's that fear. What if I lose it all? What if it's just another scam? Honestly, day trading probably isn't going to work for you. But investing is different. You're smart enough to know saving alone isn't enough to build the best future for your family. But investing in stocks can feel overwhelming. That's not your fault. School never taught us how to do this. I'm Ben Knight, and over the last decade, I've been investing successfully and consistently in the stock market, and I've taught hundreds of people my step-by-step strategy that takes less than 5 minutes a day. Now, I want to show you how to do this too. That's why I created my free online masterclass. And if you're serious about building wealth for you and your family, you need to be there. Seats fill up fast, so don't miss this. To secure your free space, go right now to www.thetradetribe.com and I'll see you there live.
So I know we've talked about this doom-mongery. I don't say it to scare people. I say it to inform people. And I remember Richard Branson first taught me this 17 years ago. He said, yeah, you want to be positive and optimistic. That's a good way to live your life. But actually, the best way to do that is to protect the downside first. So when he got into his first airline, he did a deal where he got a lease, or at least a lease where he could return the aircraft that he bought. So if it went wrong, he wasn't exposed owning these aircrafts that are hundreds of millions of pounds. So if you protect the downside first, i.e. be diversified enough such that if there's a correction, it won't hurt you too much. Also, one of the best ways to protect the downside is to never sell.
So if something goes down in value,
You
doesn't
wait.
matter.
Yeah. Because all assets, assuming their assets, go up over time. So assuming you've bought an asset and not a liability, you just wait it out. Because actually, I don't mind if my property portfolio, there's one property I don't want to go down too much because there's a covenant with my loan which says if it goes down under a certain loan to value, the bank can ask us to top it up.
Right.
So if it goes down under, let's say it goes down 1 or 2 million under the covenant, the bank can say, right, you've got to put 2 million in. It's a 100 apartment block.
Yeah.
But all the others don't have that covenant. So I have no problem if they go down in value because I know they'll double every 12 to 15 years because history has shown me that. The important thing is the cash flow. Like all of my properties except this 100 apartment block, if it went down to £1 tomorrow, wouldn't make any difference to me because I'm not going to sell them as long as the income was strong. And here's the thing, in all of this craziness since lockdown, what's happened to rents? They've gone through the roof because inflation, which has been 25% in the last 4.5 years, pushes the price of everything up.
Do you find that rental income goes up during difficult times because people can't afford to buy a house?
It's not as binary as that.
Okay.
It depends on demand. But in the UK, we have an undersupply of houses. But we've also had 25% inflation since lockdown. And we had lockdown, which created an even stronger forced undersupply of houses. So that's what pushes rents up.
Do you have any final advice for everybody for when this crash happens?
The last crash was 2007. So that's 17 to 18 years away, isn't it?
Yeah.
So just from natural cycles, it tells you we've got to be close. How are they going to pay back that 1 trillion of artificial stimulus from lockdown in the UK? That's essentially going to create increase in taxes. What about the 25% inflation since the start of lockdown, which means your money is worth 25% less now. Your spending power is the lowest it's been since the Second World War. It's the lowest it's been in 100 years. Do you know the only time your relative spending power was lower was when there'd been a fucking world war?
Got a lot of exposing to do.
All right then. Thanks for tuning in. And remember, if you don't risk anything, you risk everything.